What's going on, guys? All right, so today we are talking about a pretty crazy fund that I think has huge upside potential, that's paying a massive dividend, and I think it has some room for serious growth over the next, kind of the next 3 days. But over the next like 6 months, I think that there's huge upside potential. So here we are at YieldMax ETF's homepage. And these guys are kind of new to the game in the very high distribution rate funds. We have OARC, Tesla with a distribution rate of 53.18%. I've talked about Tesla in the past. We have APLY, NVIDIA, and AMZ coming soon. But today, we're not going to be focusing on the 53% distribution rate, but we are talking about APLY, the lowest yielding fund that YieldMax has to offer right now. But I think that's going to change in like 4 days. So let's take a look here. Let's load it up. And this is APLY's page, okay? So APLY, YieldMax Apple Option Income Strategy ETF. This fund, let's read the overview so we know kind of what's going on here and go from there. So the YieldMax APLY Option Income Strategy ETF is an actively managed fund that seeks to generate monthly income while selling and writing call options on Apple. APLY pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of Apple. All right, so what does that mean? Basically, they're going to sell synthetic covered call options. They're going to buy synthetic covered call options on Apple stock in order to pay a monthly dividend income to holders of the fund. Now, this does have an expense ratio of 0.99%, so you're basically paying a 1% maintenance fee to have this fund. But if it does anything like Tesla does, then I'm okay with paying 1% to get 50. But we're going to come down here, fund data and pricing. All right. Nobody knows about this stock. Nobody knows about this fund. No one's heard of it. There's no videos. There's no data. So we're going to take you through it. All right. Net assets, 10.77 million. Okay. 10.77 million. I have cars, or I have friends with cars that are worth more than this. NAV, net asset value. Okay, $22.68. The closing price is $22.73. So we're trading right at NAV. Okay, so the net asset value, the total of all the assets in this fund, when you're buying the fund as of right now, you're basically buying it for just the price of the assets, which is fantastic. I love paying what things are worth for things. Okay, so that's a good spot. This is the only red flag here, or well, there's plenty of red flags, but this is the only real red flag to me, which is shares outstanding. There's 475,000. All right, so why this is a red flag to me, guys? This goes hand in hand with the total net assets thing. So shares outstanding is really low. So if this is something you're looking to put a lot of money into, or kind of jump into, or jump out of, there's not a lot of shares going around, which means there's not a lot of trading of this stock. It is brand new. So if you're looking to get into a brand new fund that most people don't know about, you're going to deal with liquidity issues potentially. Now, I've never had any issue buying APLY. I haven't. It's been easy and it's fine. But we can see in recent charts where whales and kiddie pools make splashes. Okay, that is something that is important to know. If you have a small pool of people and you jump in with a huge bag, you will make waves. All right, and we're seeing that in the price increase of APLY. Now, I think that's great. I think that that will continue to raise the price. So I think we'll see price appreciation on this ETF while capitalizing on some huge dividends. But yeah, just keep in mind, if you're trying to throw like $1 million into this, and that's a ridiculous thing to do, so don't do that, at least at this point. Not a credit counselor, wealth manager, financial advisor, or whatever. It's just don't, I don't know, buying 10% of an entire fund sounds crazy. But yeah, you might want to buy this thing over time, buy it in small chunks and see how it goes. That's what I'm doing personally. So, performance, 1 month. All right. Really, it's only like a month and a half old, so you're going to see a 1 month chart. We have a 7.59% increase in APLY's NAV. So the net asset values have increased by 7.59%. The market price of APLY is up 7.21%. Okay? So we have the net asset values of APLY are growing faster than the market price of APLY, at least in the past month. Now, when we go to since inception, we have APLY's net asset value is up 15.59%. That's ridiculous. I love it. And 15.51% for APLY's market value. Okay, that means since it started, the assets in APLY are growing faster than the market price of APLY. Okay, that's a huge deal. I like that. I like that a lot. Now, this fund is brand new. If you need some data, you can't really jump on Seeking Alpha and find it. All right, we'll talk about that in a second. However, performance current to the most recent month end can be obtained by calling this number. Okay, so if you want to figure out what's going on with the recent performance, you can call 866-864-3968. And they will tell you what's going on. All right? So that's pretty cool. Like, you can actually just call up the guy. That's the kind of stuff you get when you're in a fund with a net asset of $10.77 billion. Like, literally, that's a nice home in Malibu. Like, that's insane. But that's the whole fund's value. But that's okay. Top 10 holdings. Okay? This is the meat and potatoes. This is the stuff that gets us excited because this is what's going to pay you or not pay you. Okay? So here we have basically what they've got. So they've got some treasury money there. It's a big percentage of it. Now, the positive equity, right? We have some Apple call options, which is great. Love to see some Apple call options that are well in the money. That makes up 4.91% of the portfolio, right? So positive equity there. And then cash is 13.57% of this fund, okay? So if we add that up, so we have 4.91 plus 13 point, if I could type, that'd be awesome. Let's try that again. 4.91 plus 13.57. That's 18.48% of the portfolio is positive equity. Now we have some puts and some sold options, okay, which are not doing too hot, and that's okay. So we're going to subtract that because that's negative equity. So minus 2.65 minus 0.31. All right, so right now, this fund, which is designed to sell covered calls and puts and all that to pay a monthly dividend, is sitting on a 15.52% cash equity position going into a payout of a dividend. That is sickening, guys. When you have a fund that's performing at this level where they have 15.52% liquid, equitable assets, I can't even stress that enough. The dividend could be insane this month. And they announce what the dividend is going to be on the 6th. Okay? So they're going to announce in 2 days what the dividend is going to be on this fund that's sitting on 15.52% positive equity in both cash and equitable option positions. That's insane. And it's all based on the performance of Apple. right? So it's not like Tesla, where a lot of people don't want to hold a fund based on Tesla. Apple has a lot more implied stability than a company like Tesla does. So seeing this kind of growth and this kind of equity from synthetic calls on a stock that's as stable as Tesla is just, as Apple, that's just unbelievable. Literature, you can read their prospectus. They have all that here. But let's take a look at a couple charts, okay? So this is the 5-day chart on Seeking Alpha for APLY, okay? So 5-day chart, we're up 0.84%. Dividend frequency, none. There's no data here. There's nothing here, right? So when you pull down and you look at like top 10 holdings, they don't have it available. Dividends, they don't have it available. It already paid a dividend, okay? But they don't see it. It's only paid once. It is what it is. We can get there. It's just, see what I mean? It's too new. That's too small. There's no data. It's a pain. And that's why I think it's a potential cash cow. But, so I was talking about the small supply and the volume and the ability to actually trade this. You can see the price slowly increasing, which is great. We love something that increases 1% every 5 days. I'm all about that. And then this is what I was talking about with whales and kiddie pools. So we have $22.71. Somebody buys a massive chunk, right? So it jumps to 23.39. So almost a 70 cent increase in the price. That's a big deal when the price is only 23 bucks. 70 cents, that's a chunk. Then it drops back down to 22.73. Okay? So this is why I kind of like I'm in here buying like 20 shares at a time, and then I'll play options on it, which you can't even do. There's no options chain on this. But the second the options chain opens on this, I'm going berserko. Okay? I've made a lot of money trading options on Tesla. I'm looking forward to doing that again with APLY. All right? But the world's going to find out about it. So this is my public service announcement. This thing exists. If I go here and I go to dividends, APLY currently does not pay a dividend. However, you click over to the history. They have paid one dividend. It was 28.8 cents. And the share price then was about 21 bucks. So, you know, this dividend payout was roughly 1.2, 1.3%, something like that. And that's why when you log into YieldMax's website, where we were first there, it said that the forward yield was 15%. It's based off this one dividend. Now, if we get a dividend that is between 3 and 5% for this month, I think that'll wake up a lot of folks who were otherwise not interested. But once you start seeing 3 to 5% dividends per month, that is pretty eye-opening. And as we saw, there is 15% of this fund is liquid equitable cash or options that are in equity positions. I don't think it's unreasonable to think that YieldMax might do the same thing that they've been doing with Tesla. As far as how does this thing actually follow Apple, well, let's pop it in. Ooh, click the wrong thing. Well, I'm all over the place. Apple stock update chart. Look how easy Seeking Alpha is, guys. I wish they would sponsor me. So we're following the price movement pretty much exactly. I mean, it's, as I said, we're trading basically at NAV or net asset value. So when Apple goes up, you know, the value of those call options go up. When Apple goes down, the value of the call options go down. The only real spikes you'll see in here are people making large purchases, and then it kind of evens back out again. So we haven't necessarily reflected the recent growth in Apple stock. So if we go to this 5-day chart, right, we've got some catching up to do, which is by itself grounds for like a % gain of APLY. But aside from that, the world's going to find out about this thing, and if they post their dividend and it's 3%, I wouldn't be surprised. I wouldn't be surprised if we get a 3% dividend in the next couple days. And I think that if they post a 3% dividend and people are like, whoa, this thing's going to be based on the performance of Apple stock, and there's a potential to earn 30% year, in 30% dividend return annually. I think that will wake up quite a few folks. I was looking at Tesla earlier today. Tesla's market cap, for example, is 17 times higher. Okay, 17 times higher market cap than APLY. If we look at Tesla, we can see what their growth looked like over the past 6 months, right? And Tesla stock was all over the place in this time too, so we gotta kind of take that with a grain of salt. But 6 months, that is a price return, not accounting for dividends, of 35.8%. Okay? That in large came by two things. One, Tesla stock being all over the place. I get it. It is what it is. But the other component to that is we do have a growing fund. All right? So as the fund grows and the market cap grows, people get into it. Okay? From the beginning of the fund, right? It started, it launched, and then it came down, and people didn't buy it, and blah blah blah. Then Tesla tanked, and then this was the price. So I got in May, somewhere around here, when I started buying in, and I've loved the appreciation. But seriously, you can watch the asset value of the fund go up, and the price goes up with it. And that's just how it works, right? It makes perfect sense when people want to join into a successful thing. So, not to harp on Tesla, but that is what I'm basing some of this off of, because I've just gone through this with Tesla. And as the options opened up, the options chain opened up, it was a huge opportunity to make massive money. I mean, this is up 35%. So, if you get in here, it's a great place. Not saying I'm trying to time the market. This is time in the market is better than timing the market. That's how I am with my investments. I think that time in the market will not only pay dividends, no pun intended, but it will pay dividends. And look at this growth. I mean, if you pull up a 6-month chart, it doesn't really get much better than that. Right? Just slow and steady wins the race. We're up 15%, and the thing's been out since May or April. Since mid-April, it's up 15%. So that's basically what's going on. Guys, I hope that you have found this video to be informative. And as always, again, I'm not a wealth manager, credit counselor, financial advisor, none of that stuff. I'm just a dude in a triangle-shaped room trying to pass on some knowledge. If you guys find this helpful, leave a like, leave a comment, tell me I'm nuts, tell me I'm a genius, whatever you want to say. I wish you all happiness, health, and wealth. And with that, roll the outro.